This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. The geopolitical standoff in the Middle East has just hit a massive boiling point. Let's get you caught up. The 60-second commodities flash. Project Freedom Standoff. President Donald Trump announced the Project Freedom Initiative, focusing on helping civilian ships exit the contested Strait of Hormuz. In a rapid countermove, the IRGC Navy released a new map designating areas under Iranian military control and warned it may act against vessels. WTI crude oil futures surged more than 3% to above $105 per barrel. This spike followed reports of a U.S. warship strike. Though denied by officials, Barclays has now raised its 2026 Brent crude forecast to $100 per barrel. The United Arab Emirates officially announced its withdrawal from OPEC, effective May 1, 2026. Despite this exit, 7 remaining OPEC Plus members agreed to raise oil output targets by 188,000 barrels per day in June. Copper futures remained firm above 5.9. The metal is supported by tech firms securing supply for data center expansion. Meanwhile, Beijing is curbing exports of sulphuric acid, a critical input for Chile's copper refining due to shipping disruptions. Gold prices were slightly under the flatline. Stablecoin issuer Tether slowed its purchases of gold for its reserves this quarter. Deep dive: Project Freedom and the new liquidity standoff. The market is no longer waiting for a diplomatic thaw. We are watching a direct naval standoff unfold. Project Freedom is the most aggressive attempt to clear this critical choke point. But with Iran doubling down on military control, global trade liquidity is caught right in the crossfire. Here is what this means for your physical and financial positions. First, unfreezing stranded capital. Cargo ships have been stranded by the closure. Project Freedom aims to assist these vessels. This isn't just a rescue. It's an emergency operation to unfreeze billions in trapped capital. If successful, we'll see a massive liquidity injection. Second, the military risk premium. While the U.S. attempts to open sea lanes, the resistance from Iran is fierce. For commodity traders, this explicitly hostile environment means maritime insurance premiums will remain prohibitively high. Banks will stay incredibly restrictive with letters of credit, ensuring only the largest, most well-capitalized trading houses can move barrels through the Gulf. Third, the post-UAE supply shock. Adding complexity is the structural shift in supply as the strait remains a war zone. The cartel is trying to project stability, but the loss of one of its top producers means the managed liquidity era is fracturing just as the logistical routes are being militarized. The TradeFlow take: we are entering a phase of extreme binary risk. If Project Freedom safely clears the backlog, expect a sharp pullback in oil prices as relief washes over the market. But if threats are met with action, $105 WTI will just be a stepping stone on the way to historic highs. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.